How do some of the world's sharpest minds start their day? By putting their brain first. And it's not just our secret leaders who kick off every day with heights. From Stephen Fry to best-selling author and fellow podcaster Dr. Rangan Chatterjee, who give us rave reviews. So if you care about your brain's health and cognitive potential, think heights. Listeners can get 25% off their first month with the code LEADERSHEIGHTS at www.yourheights.com.
Well done, you've made it. Episode 15 out of 15 of season 1. And Dan, who have we got today?
So today for our final guest, we thought we'd end the series in style with the very stylish Simon Cook. Now, Simon is one of the best-known VCs in London. Rich and I are probably biased because we would definitely consider him a friend. From our point of view, he's therefore one of the most popular VCs in London. Now, VCs don't generally get a good reputation from people they work with, so it is very important to point out that neither Rich or I have ever actually got any money out of Simon.
That's probably why we're friends.
It's probably why we're friends, because we get to pass the distinction off. But for those that do and have worked with Simon, as you'll hear in the episode, through a live feedback session with him, things don't always go to plan when you're, providing venture capital into a business. Businesses don't always go to plan, and actually the way you conduct yourself as a VC in a long career is the most important thing. Your reputation is everything, and Simon's is particularly impressive. He has a lot of friends that he has worked with, and I think that's pretty unusual too.
Well, I think it's pretty that's the whole VC model, isn't it? That if you go into VC, you've got to expect that you're going to have some rough companies.
Unless you're Simon.
But even if you are Simon.
Even if you're Simon. Okay, fine. So, anyway, from very humble beginnings in Birmingham, today's guest takes us through the quite amazing rise of his own venture capital firm. And what I really like about this is actually Simon's perspective that he's an entrepreneur. He's every bit as much an entrepreneur as we are. He has to go to investors all the time with his checkbook and ask for money, and he has to go and pitch businesses all the time. And, fundamentally the way that he describes a venture capital firm, which I think is probably the best detailed description of the history of venture capital, why it works, how it works, and what happens from his side of the table, is actually some of the best description I've ever had the pleasure of hearing with regards to how the whole system works. So if you're the type of person that thinks you're ever likely to need venture capital funding, this is 100% essential listening to you. And if you don't think you are, then perhaps just listening to a charismatic and charming gentleman like Mr. Simon Cook will do you just fine. So without further ado, Rich, can you please hit play?
From Runway East Studios in London, welcome to The Secret Lives of Leaders.
Today's special guest is, unlike many of our other guests, a man who turned to the dark side, as it were, as one of the key venture capital investors in the UK, the CEO and founder of Draper Esprit, Mr. Simon Cook. For all those that were hoping to listen to an in-depth interview with a right-arm medium-fast bowler who played for Middlesex and Kent at first-class level between 1999 and 2012, you're out of luck, because although this Simon Cook has both the accent and the look of a man who could play county cricket, he's instead dedicated his time to building the UK ecosystem of big winners and next-generation entrepreneurial successes by investing in pioneering and innovative businesses. He's not quite yet risen to the levels of fame held by his other namesake, Simon Cook, the Canadian lumber merchant born in 1831, who also has his own Wikipedia page, but that's mostly because the modern-day Simon Cook has spent his time most recently focused on disrupting the traditional VC structure by taking his company public on an IPO that raised over £100 million of permanent capital, as he calls it, which he intends to use to grow the UK's influence globally. He's been involved... Is that right?
Yeah.
He's been involved in some of the best-known deals in the UK, including LoveFilm, Graze and Trust Pilot, and has very kindly offered to come in today and answer some questions for us, sitting on the other side of the table from the entrepreneur. Though it's worth mentioning before he does, he's done that bit too, once upon a time, and that constant fascination with disruption is indeed what led him to innovate the traditional VC model. So without further requirement for monologue, it's time to formally or informally get to know our guest, Simon Cook. Hello, sir.
Hello. Hi, Daniel.
How are you doing?
I'm good, thank you.
Are you familiar with your other namesakes?
I have never Googled my own name, of course, so wouldn't have seen any of that before. And please don't ask me anything about cricket.
Okay, and are you upset to know that a lumber merchant has a Wikipedia page and you still don't yet?
Well, would you say he was a fellow Canadian? So that's fine.
Are you a Canadian?
I am actually Canadian. I grew up in Vancouver. So I was born in Birmingham, which was the Silicon Valley of the universe 200 years ago. But I grew up in Canada.
Maybe it is then.
It might be. Maybe I have a secret
really
lumber
aged.
business.
Yeah, exactly. It's interesting. Where were you in 1833? Okay, so before we get started, we'd like to warm up some of our guests with a quick fire round. So very quickly, whiskey or wine?
Wine.
Public or private company?
Hybrid, both.
Nice. Does that exist?
Me.
Are you? Okay.
Yeah, we went public, so you don't have to, Daniel.
Okay, very smart. Very smart. Entrepreneur or VC?
Both. Hybrid.
I knew you'd say that. Okay, interesting.
I'm going to sit on the fence through all these questions.
Zuckerberg or Musk? Hybrid?
Definitely Musk.
Oh, really? Interesting. Being in the UK for Brexit or Trump being your president?
Ouch. I was in America the day of the election, and it was it was hard not to be smug, but it didn't feel good being smug. But the faces of the people on the West Coast were very similar to the faces of people in London, so the whole world's going sideways.
So you're probably going to say Brexit then in that case.
I think Trump can go after 4 years. Brexit is going to take more than 4 years to fix.
Very true. That's very true. And finally, e-commerce or gaming as an industry?
Well, as my first company that I founded when I was 19 was a computer games company, so I guess I have to say gaming.
Fair enough. Okay, so going back to the story of who is the real Simon Cook with no Wikipedia page, can you take us back to your roots? You mentioned that you were born in Birmingham, but you grew up in Canada. So what was it like growing up for you? What was your upbringing?
Born in Birmingham, moved to Canada as a young kid and did most of my schooling in Canada. So I kind of consider myself kind of North American.
Where?
In Vancouver mainly,
okay.
So West Coast, North West Coast. And I guess, I was fortunate enough to have my dad worked in construction, moved around, but he brought home a PC at some point in the 70s, dare I say it. And so I was lucky enough to have a computer at home very early on in the home computer revolution. I probably threw myself into that quite a lot. So I was probably your archetypal 80s computer geek kid writing software in the bedroom late at night with a few other geeky kids in the school computer club.
And there was no Reddit or anything to be posting it on at the time, so it was all just meetups?
Well, actually, no. I think we had a modem, and we used to download some homework off before the internet, but off of the various networks that were around. So we were doing some online stuff. In fact, I probably shouldn't say this, but one of my first ever business ventures was selling copies of games illegally or not to my fellow schoolmates, which we would, find from various different sources.
Did you go to university?
I came back to the UK to go to computer science at Manchester, which is where actually it's amazing how the world's changed. So I actually had a gap year working in the video game industry, where the CEO was 21, I was 17 or 18, and every employee was, this is the late 80s, but we were in a kind of tech startup with young CEOs, and we didn't know what we were doing, but we were making computer games and making a lot of money. And actually, I nearly didn't go to university. I was kind of going to drop out and stay in the games industry, but they gave me a load of kit as a leaving present so I could work at night while I was at university. And in the world, it was a very different place. And I actually never told a single person in the university that I was working, because I felt they would throw me off the course for not being academically minded. You're supposed to study at university, not make money. So I never told any of my professors that I was writing games and making money on the side, which today, of course, everybody would, there's whole entrepreneurship communities and cultures and societies you can join, but that didn't exist in the late 80s.
So you've been in venture capital since 1995, but what were you actually doing before that? So you've mentioned the gaming company that you started in.
So again, part of the culture that you after university, you kind of have to be proud of the thing you're going to do that your mom wants. You've got to tell your mom you've got a proper job. So after, in the careers office, obviously entrepreneurship wasn't a choice. Video games didn't seem to be a real choice. And actually Nintendo was coming in with the console. The games industry was moving from home bedroom to a much more serious business at the time. So some Flash Git in a nice suit came round on the milk round and said, "You're not a real man unless you're an investment banker or a management consultant or an accountant." But I wasn't going to be an accountant.
It makes you feel better. When I left Nottingham, we had exactly the same chat. Yeah. And that was in 2007, and it's exactly the same chat. Accountant or management consultant.
So I said, well, I have to prove that. So I applied to Anderson Consulting and got rejected from there, but ended up at KPMG Management Consulting and spent a couple of years wearing a suit, going around the city doing consulting-y stuff for a couple of years. But then thought about getting back into the games industry. But around that time, Wired Magazine launched, the first one, not David Rowan's one, the one from the 90s. And I picked up a copy of Wired Magazine in about 93. I thought, wow, this is amazing. The world is changing, and actually maybe there's a combination of consulting and video gaming. And I bumped into the guy running media consulting at KPMG, and he said, we need to build a digital practice. The world is changing. So I helped inside KPMG start up the internet group in 94, 93. And my clients were investors who I was a young kid, didn't know much about anything, but they asked me to write some reports on set-top boxes. So I did the IPO of Pace. Did some multimedia investing, invested in some Brighton-based video CD-ROM companies. I used to write the reports for the venture capitalists. And then after a couple of years, 3i was ramping up a tech team, and they said, well, instead of having generalist, nice people paying Simon to write the reports on these companies, why don't we train Simon to be a venture capitalist? And I joined 3i and was put through a very rigorous, highly skilled training program about how to read a balance sheet and invest in a startup. And so that's how I got from writing games to writing reports to writing checks.
So what made you actually attracted to go into VC as an industry rather than actually going into an industry that you loved, like gaming, and carrying on there and becoming an angel investor, for example?
So
have you ever done angel investment, actually? Have you ever been in a situation where you're able to, or have you always been in a VC and therefore not able to?
So before I was a VC, I didn't have the money to, I was like everybody else with a mortgage and a young wife and a kid, so I didn't have a lot of spare capital. And then once you become a VC, usually you're precluded from having your own side vehicles. And because we invest at most stages, I've put everything we invest in is through the company historically. So I haven't done a huge amount of side investing. It's all been through, I tend to fall in love with the investments I make. So if I'm going to have that much passion and focus and support, I might as well put it through the business rather than being something on the side. But I think going into venture capital, my dad was quite entrepreneurial. There are many episodes of Only Fools and Horses, which, look pretty much like my father and grandfather and family, who are always trying to make, some money on the side or find a deal. Or my dad would often sit having a beer with me, inventing new kinds of crazy things. So he's a kind of mad inventor, entrepreneur who never had the chance to actually fulfill that. So I had a paper round from the two defining features. It was mucking around with computers and having a job as a paper round or doing various. So I always made money, and my father always instilled on me, you've got to try and be successful and try and make money and to be commercial. So I've always been fascinated by startups and making money and inventing, I guess, as it used to be before it was startup, and putting those two things together just is a passion. So I've always been, I've always found my job. It's an absolute honor and a privilege to be able to take other people's money, sit alongside really smart, incredibly creative people who are changing the world, and to share in that experience and to get paid to do it. So it for me, I guess I found my job is being an investor and a venture capitalist is my passion, and I guess that's why I'm still doing it and still enjoying it 20 years later.
So 20 years in the VC industry already. So I guess in the UK that makes you one of the incumbents, really. You're now the CEO of Draper Esprit. Can you tell us why are there so many variants of the word Draper in the VC world? So between Draper Associates, Draper Esprit, DFJ Esprit, Draper Fisher even. Can you tell us a little bit about the history of this so-called Draper and how you got involved?
After World War II,
yes,
there was a need to rebuild the economies of the Western world, and there were different people asked to do that. Now, over here in the UK, the government forced the banks to create something called Investors in Industry, which went on to become 3i, where I ended up working, and that was it was a bit like BGF now. It was a balance sheet where people would give money to SMEs, young companies that needed to grow. In America, they asked somebody called General Draper to do that. Now, General Draper had been in charge of the Marshall Plan. He was an economic advisor to governments, and he had been actively involved in reconstructing the economies of Japan and of Europe. And when he went back to the States, he was asked to help build venture capital vehicles. And he listed one. So he had one listed in New York. And that didn't, under SEC regulations and disclosure, the public markets in America are very different than the public markets here. And it didn't work. And he felt that he wanted to go down the private route. So he actually moved to Palo Alto and into an orchard farm. There was nothing there. And he started the first ever venture capital firm called Draper, Galthwaite and Anderson in 1957-58. So Tim Draper's grandfather literally invented the venture industry in Palo Alto.
Right, okay.
Tim Draper's father went on to create a venture capital firm called Sutter Hill, which is one of the best names that's been around in the late 60s, 70s, and invested in all kinds of great and wonderful companies. I won't, there's a whole book on it, and I won't name them in case I get them wrong, but some of the biggest names from the 70s and 80s were investments made by Tim Draper's grandfather. So it was only natural that Tim Draper moved into the venture industry, as his entire family had been doing it from the beginning. And he founded Draper Fisher Jurvetson in 1985 with John Fisher initially, and then Steve Jurvetson came in. And DFJ is largely misunderstood in the venture world because they were for me, the perfect venture company has a combination of out and out entrepreneurship and market forces, which what Tim represents. You need financial acumen and some control, and sort of you need to be, to manage the numbers. And John Fisher was a very much kind of brought that element as a East Coast financially, focused guy. And then you need to understand the science and technology. And Steve Jurvetson is an amazing person who really gets deep into the technology and science of startups. And so they were, to me, the perfect venture firm. But they also were very cutting edge. And so they tried lots of different things. So one of the first things they ever did was to create a little network of seed funds in America. So they literally had partners in Alaska through to Florida up into Northwest. And some of them used the Draper name, some of them didn't. But quite often, it's really hard to invest in venture capital because if you do something different, LPs kind of don't like it, or they get a bit worried, and these investments and ideas can take 10 or 20 years to see them working. So a lot of what Tim and Draper Fisher were doing in terms of changing the model, it wasn't obvious it was working first. And the first iteration of anything, there is a minimum viable product. So the first network was a little bit mixed success. They then were the first venture firm in 1999 to go global. So they then said, actually, there's entrepreneurs outside the Valley. And no other VC in the Valley was investing that much outside at all, really. And they went to China and India and Europe, and they set up ePlanet. And DFG Planet was a single global fund that did things like Baidu. So they bought 28% of Baidu for $7 million, which is now worth $20 billion. They did Skype and various others. But they found that a single global fund was, even though it got into some great deals, it was too big and wieldy. And so in 96, 97, they went to the next iteration of the network, which was lots of seed funds in America and one global fund, to let's go out and find the best partner in each region. And somehow they bumped into us. In fact, we went to Sand Hill Road. So Stuart and I founded the business in Esprit in 2006. And Stuart had set up 3i in the Valley. So my co-founder had been in the Valley as a VC for 4 years. We definitely wanted a Valley partner. So Stuart and I went up and down Sand Hill Road and pitched all the VCs to buy a minority stake into Esprit and become our partner. And all the other VCs, because they hadn't really run networks, they were still thinking we need a global fund, and they wanted us to be reporting to them, and we could be like this little satellite office of their funds. But DFJ really understood they needed to empower us as entrepreneurs. If we were going to be successful, we needed to run Europe. And so we sold them a stake in the business. They invested a few $1 million, and we became their partner as DFJ Esprit. And then we have DFJ or Draper partners in Japan, in Korea, in China, and all around the world. So
is that like some annual Draper conference every year where everyone that's ever had a Draper associated with their name, it's like thousands of you?
Yeah, so we do have a big annual Draper. And then a couple of years ago, DFJ itself decided to focus more on the Valley, and Tim left and took the global network with him. So we went from DFJ network to Draper network, because DFJ is now a Valley-focused group,
right? Okay.
Doing early stage Valley deals, and they have DFJ Growth. And then Tim took the global network a lot, and we went with that. And so the global activities now are branded under Tim and work with Tim. and we became the Draper Network, and that's why we're Draper Esprit now, and we have, again, funds. And so every year, twice a year, we get together, but the big conference is in November in California, where we have our CEO event, where we get a few hundred CEOs together, along with 50 to 100 big tech companies like Google and Amazon and Facebook. We have a big conference, and we share ideas, and we get entrepreneurs from all over the world sharing ideas and contacts, and it's quite an exciting and fun event. We just came back a few weeks ago.
And survived. It does sound like it would be a lot of fun. Can you talk to us, you mentioned, and just for the sake of for listeners, and younger listeners especially, so you've used acronyms like LP, and of course we talk about VC. So let's start with, can you actually describe what a VC is in your own words? Like, what does it set out to do? What's the purpose of a VC in an ideal world?
So VC stands for Victoria Cross, and it means that I'm a very brave soldier. Is that not the right answer?
Absolutely. And moving on, an LP?
I think I have to be very careful. LP stands for limit. No, so VC is venture capital, and I guess that means capital, and it means venture in the adventure sense. So it's risk capital. In its truest sense, it comes from Victorian coffee houses, when 400 or 500 years ago, a group of people would meet in a coffee house down the road here and say, let's get together some money and buy a ship and a crew and send that crew off and around the world. And maybe a few years later, they might turn back with a hold full of gold and goodies and spices, and we'll make a fortune, or we might lose all that money and never see it again. So venture capital really started, I guess, in the days of exploration, when we would fund management teams to take, teams of startups in their wooden boats and sail around the world, and maybe occasionally a few years later come back with some.
They would
return.
deserve a Victoria Cross.
And actually, they were, and the idea that 20% of the profits comes from that time. Carried interest meant the captain's carry of the hold. So when the crew got back, the crew got 20% of what was left in the hold, and that's why we get 20% carry from investing. It's not quite the same today. We don't expect our startups to go out for 3 years, not see them, and die on their adventures and scrabble back to London. Although some of them are actually probably even more exciting journeys than that. But the whole idea is about taking a risk with a group of people who go on an adventure and sharing in some of that bounty when it comes back. And that's where venture capital comes from. In terms of science-based venture capital, actually a large part of it, the Silicon Valley of the world was in Birmingham, where my family comes from, in the 1800s, when science was the new toolkit, and we were inventing things like soap and iron and steam engines, and that was because chemistry was becoming understood, and a guy with a chemistry idea would go along to a venture capitalist and raise money to then build products and then market them. So there were venture capitalists in Birmingham 250 years ago. They were backing scientists who would create products like soap or steel or porcelain or pottery, and then they would build global businesses and invest all over the world, then take those products all over the world. And the Industrial Revolution came on the back of that. 100 years ago, there was a textile revolution. People used to make all their own clothes, and then sewing machines came in, and there were a lot of retail startups you hear about today, like Debenhams and Moss Bros, and a lot of these big names were startups 100 years ago, when people could actually start manufacturing clothes and build startups then. And now, of course, today we have the digital revolution, and so what venture capitalists do today is, people with laptops and building apps and teams that can create new products and services in a digital space. We can now put risk capital behind them, and hopefully they're going to create something with a lot of value, and we share in 20% of the profits of that with our investors.
And LP, just to clarify.
And so historically, we invest other people's money. In America, because General Draper moved to California, he took a 10-year limited partnership structure, which used to be used for oil and gas exploration. So if you dug a hole in the ground with oil rights, it was basically a 10-year fund. So you'd get 5 years to explore, and then you'd get 5 years of the profits from that. And so a 10-year fund was taken as an off-the-shelf way to invest in technology. Now, and that's called a limited partnership fund, which lasts. You have 5 years to invest and 5 years to sell. And for some reason, that kind of has been the model that's used over in America. In Europe, we have lots of different models. And a lot of us have tried the American model and found that actually it takes longer than 5 years to build the best companies. And investors here don't like to have their money locked up for 10 years. They want to have a bit more flexibility. So what we've discovered is that limited partners who give their money away for 10 years and then wait for it to come back isn't necessarily the right answer. Some people do that here, but there's a lot of people in the city that want to invest in a longer term structure. So our structure is permanent. We raise capital, and when we sell a company, we keep it, and we just keep growing the balance sheet. So we don't have limited partners anymore. We now have shareholders.
Okay. You probably see more entrepreneurs than most. So talk to us a little bit about entrepreneurship. What do you see as very common traits? So you meet a bunch of entrepreneurs. What's the thing that you always see that they tend to have? Are there commonalities, or is it the difference that is the difference?
I think so. We look for real entrepreneurs, people who can see the world in a different way. Tim and Draper team, the guys have backed people like Elon Musk. When in electric cars, when nobody was talking about electric cars.
Well, I saw they did SpaceX as well.
SpaceX, and so that's almost the epitome of the ultimate entrepreneur. A guy comes in and reinvents an industry that hasn't been invented in DFJ. So I take a lot of inspiration from what Tim and those guys have done there. We're looking for those people. We're looking for real entrepreneurs. And what does that mean? That means somebody who's got a vision for the way the world should be, and can see that there's products, whether it's a Steve Jobs or others, there's something the world needs and they haven't got it yet, and he wants to build that and has a real vision for the products that he wants to deliver. So we look for that. There's an entire industry growing up about how to raise money, and there's so many companies set up just to be invested in by VCs. So we tend to look for companies that aren't looking for money, right? We don't like the people who are, I've done that seed round, now I do the A, I do all these people that play with these metrics and think raising money is a sign of success. For me, we try and find people who are really passionate, are focusing on big needs, and are building products, the hard way, like through graft and perseverance and struggling through the ups and downs, and that's what excites us. And we look in a product visionary. You can build a team. It doesn't have to be the perfect team, because you can hire a CFO and a CMO and a CTO, but you do need at the heart of it a founder who has a vision, which has led us into companies like Graze and Trust Pilot and others over here in Europe, where the founders really have a passion and a vision for what they're doing, and actually globally. So their ideas are actually nobody's doing similar things elsewhere. So the European entrepreneur, we can help them go international with that vision. And we do like to see people who've really done lots of pivots, who've struggled through to get it right and haven't just raised money for the sake of it. One of the investments we just closed recently was Perkbox. Perkbox is an amazing startup, some of you know, doing SME perks. So you can reward your employees and give them benefits. And they're a company. They've said they're going to do 14 million this year, up from 4 last year, and growing at a huge rate. They've only ever raised 350K 5 years ago. For 5 years, they've built through trial and tribulation and not taking salaries and working really hard to get the product right. And now they're in amazing shape and have a great company. And their company was set up to make their customers happy and their employees happy, and it's a wonderful thing for us to invest in that type of company.
So you don't necessarily see a pattern of the high growth, for example. So did their C round and 6 months later they're straight into VC because they're growing at that rate. Actually, there are edge cases, and plenty of them, where you've built a business over a period of time, got it to be profitable or at least growing very quickly at that point, and it's still attractive as a VC. So I think as a founder, you kind of feel like maybe you missed the boat if you don't do it. And that's basically the zeitgeist, where the PR around in the industry is if you don't do X, Y, and Z within 3 years, no one wants to touch you because you're not hot property at that point. And is that something you share?
Yeah, no, I think, it does. I think, there's 10 million SMEs in Europe and 10 million in the US, and there's about 1,000 companies raise a small amount of money, and in the States about 1,500 growth rounds. In Europe there's about 300 growth rounds, but there's 10 million SMEs, and I think there are some amazing companies, right? And I think entrepreneurship for me means building an economically viable company. It doesn't have to be growing. It doesn't have to be $1 billion. I love small companies. I love entrepreneurs that create, great places to work and really happy employees. Now, occasionally, you can invest in those companies and make a lot of money. But most companies don't want venture capital, and some of the best companies in the world get screwed up by venture capital. Venture capital is the wrong thing for many companies, and we should celebrate entrepreneurship. We should celebrate SMEs. Nobody has a job for life anymore. Big companies are crumbling, and the future is a small company. But if a small company doesn't raise money, it doesn't mean it's a bad company, and very few do raise money. And so I like to find the entrepreneurs that are building great businesses. And I like to have to chase them and convince them to take money from us, because with our money, and this is why venture capital is important, what we can do is unlock growth. So if it's working really well, what we like to do is say, you're doing really well, but if we put some money in and helped you with some strategic advice how to enter Asia or America or Europe, you can make real value. And actually nobody else is doing what you're doing. And we think if you can move quick enough, you'll capture the market position, and other companies will value that incredibly. So, we like to find companies where our money makes sense, and they're not set up purely, because they think they're having to play this textbook, Series A, B, C game.
Okay. So who are the most impressive entrepreneurs you've met?
So apart from the obvious, Elon being part of the network, over here in Europe, we've worked with wonderful people like William Reeve and Alex Chesterman, who've done amazing things over the years, multiple times. Graham Bosher at Graze and now Tails, where we've been fortunate to be shareholders. Amazing. Nicholas Enstrom at Skype, fantastic. And when Tim, Tim, I actually said no to Skype, and Tim said yes, which is, explain. I learned a lot, and I'm still learning.
But, we're right eventually.
Yeah. So
after they ruined the product. But...
Yeah, Nicholas is an incredible entrepreneur. Again, he'd done Kazaa and other things before, so Skype was not his first adventure there. Sure. So there are some incredible entrepreneurs around. Some of the most amazing ones not celebrated. A lady, Paula Byrne from Pushbutton, who was acquired by Amazon, now runs, or has now moved on, retired, but built Amazon's global streaming business here in London. So there's some hidden talent of real successful entrepreneurs in the tech industry. Many of them are under the radar in London.
And I guess that's a personal choice as well for the entrepreneur, whether they want to talk about it or not. So what's the best deal you've done, and why? If you could pick one deal and all your deals with that one on repeat.
Well, I personally have to fall in love with every deal I do. I kind of have to fall in love. And when I was much younger, I almost think, right, I'm going to quit my job as a VC because this is going to be so successful. I'm going to have to join this company. And I actually did the deal where one of my VC partners in another firm did quit his job and join the startup. So, if you don't really believe that it's going to be that a world-changing company, you shouldn't invest. And we always kind of fall in love with the people we invest in. So it's hard to pick one. But I suppose the one that was perhaps the most well-known success story from a tech kind of point of view was when James Collier came into my office in '98, I guess it was, and drew a circuit diagram on the wall. And he said, I can make a radio chip for $2. And I said, well, what do we do with that? And he said, well, your phone at the moment, your Nokia phone has an infrared point and click. So you can share information with me over infrared, but nobody uses it. And it's $2. And if you want to put a radio chip in today, it's $20 and nobody can afford it. And the battery life is, you put a Wi-Fi chip into a phone, it kills it. So he thought, well, I can make a radio chip for $2, single chip radio, CMOS chip. And I thought, well, that sounds pretty cool. Maybe all the Nokia guys will take out the infrared and put radio in, but nobody will ever turn it on because nobody used infrared, but it just sounded like a cool thing. And so we did the $10 million Series A round. So Amadeus and myself put $10 million in through 3i in the A round, and we helped build Cambridge Silicon Radio, which went on to get 50% market share of all Bluetooth headsets and devices in the world. And obviously, everybody knows what Bluetooth is now, but the first couple of years of CSR, it was very hard to get it funded because it was a European technology leader, and the Valley thought Wi-Fi could do everything because they think, a lot of the US investors or US engineers look at big horsepower as a solution. They have a lot of resources. So they have big computers, big cars, big everything. So they, big batteries. Who cares if, your phone battery dies quickly? And so we stuck to that, and people wouldn't invest, but eventually people came around and CSR went on, and the founders were adamant to go public. They didn't want to sell out. They wanted to build a real long-term business, and we listed it on LSE. Ultimately, then that acquired a bunch of other things and was bought by Qualcomm, for $2.5 billion a few years later. But that, that literally was a guy writing in a circuit diagram on a wall, for three people and an idea through to a multi-billion-dollar IPO.
Bluetooth in itself has been through a bit of a journey and still popular today, amazingly, after all that time. So it's still very, very relevant.
Sorry to interrupt. We're going to just take a short little break at the moment. We have one request, and it's only going to take 30 seconds. But firstly, can you subscribe? Make sure you don't miss out on the next series of Secret Leaders. You can do this on iTunes, on SoundCloud, on YouTube. Just go there, search for Secret Leaders and subscribe. And our second request is, whilst you're here on your phone, can you please just send us an email, hello@secretleaders.com, with your one suggestion of a guest for the next series. It might be somebody you know, might be somebody you've listened to before and you just want to hear an interview with us on. But we'd be really grateful if you could just give us one suggestion. We've already got about half of our roster lined up for the next series, but we're looking for some really great guests, and the best way is to find out what you all want. So I'll let you get back to the interview with Simon, but I look forward to seeing your emails.
Okay, so who are the best angel investors you've worked with? Because you obviously have to do deals alongside VCs. Definitely not going to ask you to name and shame certain VCs because we already know that you won't answer that because you're too sensible. But great angel investors you've worked alongside.
It's a very blurry line, because what tends to happen is people become entrepreneurs, start a company, then they make a bit of money, they sell out, and then they do some angel investing, and then some of those angel investments kind of scale up, and then they take third-party money and they become VCs. So, a lot of VCs in the industry have come through the entrepreneur angel VC route. So there's people like Herman Hauser's been, investing in startups for decades as an angel, and has built a venture fund on top of that. There's other incredible groups, like people out of the whole LoveFilm mafia, I guess if you call it that. There's Alex Chesterman and William Reeve and all of those guys.
Simon Culver.
Simon Culver's now a VC, haven't been done some angel things. So there's a whole gang around that. Sherry Kutu and the Cambridge Angels, we do a lot in Cambridge, and I think
was she 3i as well?
She was her company was Interactive Investors. So her. She used to fight with 3i because she was III, but it was a different 3i. She was Interactive Investors, and she IPO'd. But I actually met her in the 90s when I was at KPMG, and she was looking to IPO her business. I've known her a long time. But I think the common thing is the industry's growing up a lot, and a lot of the terms are very similar now. An angel term sheet, is very, looks very similar to a VC term sheet for us, and we try and keep it very simple. At the end of the day, we don't want to own the company. It's other people's money for us, so we need probably a little bit more protection than angels need because it's their money. But we don't, we want a minority stake, and we want to have some input and influence, but we don't want control. All we can ever be. It's a bit like carpool karaoke. We're in the car with the entrepreneur driving, and there's a few other people, and sometimes we're in the back seat and we can shout and jump up and down and wave as much as we want. But it's a bit dangerous if you start grabbing the steering wheel and trying to. So it's kind of when you invest, you're along for the ride, but you have to kind of give directions. And the best angels, work that way, but they can take a bit more risk because it's their money. We do have fiduciary duty to our investors, our LPs, or our shareholders, and therefore we ask for a little bit more protections. But we also, at the end of the day, recognize it's the entrepreneurs who are driving the car, and all we can ever do is try and help them go in the right direction.
Adding to that, are there any angels that you will particularly follow because they've got a good track record at finding early stage companies?
Yeah, is that a thing?
Yeah, I think again, my advice is always again, it's not, raise money as few times as possible. So seed rounds and early stage rounds are great, and to get things proven, and we do a lot. So I think there's the right companies have a mixture of angels and VCs, and there's quite a lot of early stage VCs. So it's a very blurry line. We also have we work a lot with all the angels. We also have EIS funds that we co-invest. So we have our PLC balance sheet, but we also raise every year EIS funds from all the angels. So a lot of angels invest in our EIS funds, and then we just go off and do half a dozen deals or a dozen deals a year and put them in on their behalf. They're still EIS direct investors, but we're doing all the board meetings and management on their behalf. So we have a lot of angels who invest in our funds as well as work alongside us, and there are great ones. Yeah, I mean, there's there's some. I'm not going to name names because there's too many of them, but there's a lot of good angel groups, and of course the crowd is a new extension of that.
We've just come on to my next question, actually, which is, what do you think of crowdfunding? Because obviously there's been a legacy of VCs not liking crowdfunding because it eats into their pie, and at the same time it does a great job of democratizing the opportunity really for your average Joe to find investors if you don't have a network of angels and you don't know how to pitch to a VC, and it really opens up an opportunity. So what is your thoughts on crowdfunding?
So I guess being more open-minded than most, I think we probably started off being a bit worried. Is this the worst company selling bad investments to grandmothers, which is a lot of people I think thought of crowdfunding. And then actually on an ICE trip, I bet Alex from Just Park and a number of other people who had started to use crowdfunding as a very sensible complement to their other investors. So I'm a big believer in hybrid investing, but we became very positive of crowdfunding as a community approach. You know, if your community can buy into your company as part of your growth story and your community building, it becomes quite exciting. So we became very big advocates of the democratization and the benefits of community ownership. So we invested in Crowdcube and in Cedars, and we would work with both of them. And we recently, Perkbox was recently a joint crowd deal with us, and we've got quite a few in the pipeline now where we invest alongside the crowd. So I'm a huge believer, and even to the point where when we went public and listed our funds, effectively, an IPO is just a big crowd fund. We anybody can buy shares, and a lot of entrepreneurs in London have. So we've crowdfunded our funds and removed those layers, if you like, of all the different steps. In the old days, you would invest in a pension fund, who would then hire an advisor, who would then put it in a PE fund. By the time your money got to me, there's 5 layers of fees taken, and you don't even know what your money's in. And by democratizing crowdfunding or IPOing venture funds, it allows people to have much closer access to their investments without all of the costs of the city.
So you are an advocate for it, essentially. And
Absolutely.
You think the future of investing in general is going to be a hybrid approach, angels, crowd, VCs, and I guess probably other forms as well that don't even exist yet. What do you think about the AI VC?
Well, like all of us who are going to lose our jobs to robots, we're all completely convinced our job is safe. So,
a good man. Okay. Well, then moving swiftly on, can you share us an interesting fact that no one knows about you?
If you come to my house for a drink one night, you might have me entertain you with my karaoke piano. So I have a piano. You can pick any song. Brilliant. We can pull it up off the internet, and the MIDI track comes up, and I will sit in front of a piano and play for you that song, and we'll have a good old sing-song. The truth is, I can't play a note. My piano is completely automated.
That's incredible.
And I usually get most people so drunk they don't notice my fingers aren't actually touching the keys. But we have a lot of good sing-song karaoke nights.
I mean, having had Michael Acton Smith, that sounds exactly like something you'd get on Firebox. Do you see yourself as an entrepreneur? You've been entrepreneurial with your approach to VC, so...
Yeah, I mean, I'm absolutely, I have the best of both worlds. I get to be a VC with entrepreneurs, but I've had the luxury of building my own business 10 years ago, founding that, and having gone through fundraisings and selling a stake to Draper and then to doing the IPO. So I've lived the life that entrepreneurs live, which makes me, I think, have a much better and deeper insight into what the people we invest in are going through. So very fortunate to do both. But I do, consider myself having, been through building a business. And what's really exciting now, the platform that we have, which is really now, even though it's 10 years in, we're really now starting to accelerate. And I can see, Draper Esprit being here for 20 years. What we're building on the public stock market has plenty of room to grow. Some of the other listed venture funds like IP Group or Imperial Innovations in the university space, they have billion-dollar market caps, and I think we can get there, relatively shortly, hopefully. And that's quite exciting and motivating, not only to be out there investing in other entrepreneurs and hopefully building billion-dollar companies with them, but hopefully it adds a little bit of credibility to us as somebody who entrepreneurs want us to work with them. If we can say, oh yeah, we also built our own billion-dollar company, and the best VCs like Nicholas and some of the others have been through that entrepreneurial angel VC route because they understand. And I guess although we may have not done tech startups, we certainly have done built a startup to post IPO.
That makes sense. So I guess tricky question. But if we ask one of your portfolio company founders to describe you, what do you think they'd say? And obviously, there's the good, the bad. There's probably not much ugly, but certainly good and bad.
Yeah, every journey is different. I think I do value culture in our firm, and I think the culture of the firm. I might be wrong, but my guess is I think people see us. We are hardworking, no bullshit, open with people.
Are you direct?
I think we try to be as direct. VCs are terrible at saying no because a lot of our job involves constantly keeping open to opportunities, and not, saying no can close the door. So you try and keep everything open. So when we say no to somebody, we try and give them a reason to stay in touch, but explain why we said no. But it's not always easy with thousands of people coming in to see us. With our portfolio, I hope we try and add value. We certainly, when things need to be addressed and problems need to be fixed or strategies need to be developed, people need to be hired, we hope we get, I would expect myself and all of my team are known to be quite hands-on and helpful. I think we know what we don't know as well. So, we don't try and get involved in things that we're not good at and try and push our opinions on, how to, how best to run a sales and marketing strategy. That's the entrepreneur's job.
We asked one of your portfolio founders to describe you, and this is what they actually said. Simon is a very entrepreneurial VC. When he invested, he could see the wave of social networking rising and what we had built with very little investment. Despite us having offers from more than one VC at the time for the same deal, Simon Cook and Stuart Chapman, one of his fellow partners in crime, impressed me so much that due to the nature of how collaborative they were at the time, we had to say yes. When things became tough at Wayne post the 2008 crash and the chips were down, he was opportunistic to protect his investment and made a move to control the majority of Wayne, which we managed to fend off. Whilst I think it would have been better to get some advance notice, we didn't take it personally, and actually we understood his rationale because he explained the whole thing very clearly. If anything, it made us better entrepreneurs and it helped us grow up fast. We also managed to find another VC to buy out their position and give them a relatively good portion of their money back at the time, considering they were looking to exit as they were at the end of the life of the fund. I always respected Simon and I continue to do so. I'm a big fan. Simon is super creative and understands the needs of the entrepreneur, being one himself. I think he's evolved in his own approach since he initially invested, just like I have after years of experience. Over the past few years and since the disposal, we've become very good friends and provided each other help where we can, which I think says a lot about the relationship and him as a person. I'd be happy and even delighted to recommend Simon as an investor, and would certainly approach him myself if I was one day looking to raise funds for a future endeavour. He'd be one of the first people I turn to. I would not do that if I didn't respect his knowledge and approach in investing. He's old school in a good way, but can be down with the kids at the same time. Just watch out for the backflips. What do you think about that approach, that comment?
He was obviously talking about a cricketer.
He's got the wrong one as well.
Oh, he's done it again. Bloody hell. Okay. Well, let's any comments on that, or
no? I think that's very kind. At the end of the day, if you're going to be in this market, you are going to be working with the same. We back serial entrepreneurs over and over again, so you can't be too short term. Of course, we have a fiduciary duty to it's not our money. If things are going sideways, we do have to protect the people in our funds, but in the right way. So we try and find a solution. And in this particular case, we found a solution where we got some and we left enough for everybody to go forward. So I think it was a very creative partnership. One of the things that we are known for is creativity, and I think we always try and find a solution that fits everybody. So I think that's a fair assessment. Thanks, Pete.
So final couple of questions then to wrap up. You're clearly a very successful man. So what actually keeps you motivated to go to work every day and constantly build more? Do you ever feel content?
I don't know. As to the last comment about being down with the cool kids, I don't know. I love new ideas. I love energy. I love technology, and I think there's so much. And I love entrepreneurship. And we're in this revolution now in Europe, where I guess it's been going on for 20, 30 years in the Valley, if not longer. But we really are. For me, entrepreneurship is becoming a legitimate career choice. Startups are the new rock and roll, and everything I've been doing for 20 years is now just in Europe starting to really blossom. So if you go back to the Valley in the mid-90s, DFJ and Sequoia were raising $150 million funds in the mid-90s. They then scaled up and are the brand names that dominate the industry today. I'm very much excited and believe that Europe's going through that. So over the next decade, those of us that stick with it and invest and build and back the best entrepreneurs will be the brand names and institutions that back generations of European entrepreneurs. I'm hugely proud of European technology, and having spent 10 years trying to convince people there's value here, or 20 years even.
I think just to wrap up, they say it's lonely at the top. Do you agree with that statement?
I think it can be very lonely at the top running an organization, because you always have to keep a brave face. And I think I've learned, sometimes if you don't keep that motivational brave face through the tough times, you can have challenges. So you do have to steer the ship, even though you may be in troubled waters, and that can be lonely, because what you want to do is scream and shout and bang your head against the wall. So there are support groups like ICE and YPO and others I found very useful as an entrepreneur CEO, to be able to find and hang out with other entrepreneurs and openly share what's really going on. And so the way to deal with the loneliness at the top is to find other people in similar situations and to be open and sharing. And there's great groups like ICE and YPO and others out there that allow you to do that.
And finally, just to end on a positive, inspiring note, as I know you're an inspiring man. So What advice would you give to young entrepreneurs who are building businesses today who might one day come knock on your door?
Yeah, I think
Never ask a man for advice on a hangover.
Yeah, so I think this model of what can a startup achieve, what can a small. I think we're entering a realm where it is truly unbelievable what a startup entrepreneur and risk venture capital can achieve. And I think for me the most exciting culmination of that is the idea that SpaceX, a 10-year-old VC-funded startup, is actually going to take a man into space very soon. Has won the contract to supply people into the space station. Previously only governments could do that. It was, it's just impossible to think that a startup can do that. And so for me, it's so motivating. If we're entering, there's no industry, no company too big that is not going to be able, that you can attack. So if you be ambitious, be brave, find similarly minded investors, and you will have a hell of a journey, but there's nothing that cannot be accomplished with the startup model today, as evidenced by Elon, taking men to space with a venture-backed startup.
Very true. So if in doubt, be Elon, which is fair to say. So thank you very much for your time, Simon. It was great getting to know some of the deeper details of where the Draper name comes from, and indeed the history of VC, which I think was an added bonus, and not really a surprise that you would know all those details because you are a very detail-focused man. But for the listeners, I hope that you've learned a lot about what it takes to be a VC, and also some of the traits you should have as an entrepreneur looking for venture capital, funding, or just building a successful business. So thank you very much.
So, this is the saddest moment Richard and I have had in a long, long time.
I'm crying a little bit.
Yeah, he's crying a little bit inside, but really hope that you enjoyed the lessons and learnings from Mr. Simon Cook. We started the whole series off, if you can remember, with Nick Jenkins, the famous investor on Dragon's Den and founder of Moonpig. Exactly.
It feels like the end of term.
It does a little bit.
Like the end of term.
Yeah. So we started with Nick and we ended with Simon. So I guess in many ways one investor to another, and in other perspectives one entrepreneur to another. So it just shows the kind of cycles and journeys you go on through this kind of career. And I say kind of career, I mean it's more of a lifestyle, but whatever you want to call it. And I think that, from our personal perspective, the candid nature in which Simon actually explained the details of how deals get done, how raising money works, and what it was like in Silicon Valley originally when venture capital first got created, is a perfect way to end the first series, giving some insight into how companies really function on the inside, how they raise that money and how they grow. So from my point of view, really hope that you guys have learned things this series, that you've heard a few gems from some fascinating people. If there's anything that you think we've done right, anything you think we've done wrong, anything that we can improve for next season, we're all ears. We already have some fantastic guests lined up. We've got founders of Just Eat, of Made, of Charles Tyrwhitt Shirts. Yep. We have like a whole array of people, but we're open to suggestions. So if you think we need more rising stars, if you think that we have too many heavy hitters,
less Dan Murray,
less of me, just let us know.
Yes, you can do that by emailing us at hello@secretleaders.com, or just find Dan Murray on Facebook and send him a message. I'm sure he'd love that.
Just harass me.
Just harass him. So yeah, until the next series, we're going to take a bit of a break now, but we will see you in a few months.
Thank you very much. Goodbye.